Hey there, it's Mike Wise with your weekly mortgage update. And this week, CPI numbers came out. Inflation is cooling. So, yes, it is. That means rates are getting better. So, good news ahead. Let's take a look at what happened this week. So, Consumer Price Index, they came out on Thursday. CPI, the headline numbers were down month over month, 0.1%. Year over year, they went from 3.27, which was reporting at 3.3%, down to 2.98%. And so that went down significantly there. The core month over month, it only went up 0.1%, which is down from the previous month as well. And so we're looking at very, very good inflation numbers, which has had an impact on the mortgage rates, and I'll get to that in just a second. But I want to go over shelter costs. Shelter costs. This is for those of you that get geeked out on some of this stuff, but basically that's rent, owner's equivalent rent, lodging away from your house. All of those things, they have a huge impact on the consumer price index and inflation. And so that went down from 5.4 to 5.2%, which was a significant number. That was the weight of that was huge. Motor vehicle insurance. This is another big piece of the consumer price index, not nearly as much as the shelter, but the motor vehicle insurance went down to 19.5% year over year, and a month over month it went up just 0.9%. So that's actually getting a lot better there. Used cars, trucks, they went down significantly as well. Year over year, they're down 10%, 1.5% down month over month. The electric vehicles, they're taking a hit right now. But overall, used cars, trucks, they're going down in value. You're not getting as much for that. Airline fares. This is a good sign of the economy and where things are at. And you'll see that the airlines cut their prices. Their profits are going down. They're getting less customers right now, and so they're dropping their fares. I actually booked a flight for next week and was surprised at how little it did cost. So it did. Those airline fares are starting to come down. So if you want to make a trip, now's the time to go do it. So one of the things I wanted to show you is the core inflation is at 3.3%. If you strip out shelter and motor vehicle insurance, you get everything else is at 0.19%. So the impact of shelter, I'm not going to go into the details as to kind of how this works, but basically the shelter costs, that's really driving, and the insurance costs are driving the inflation. And the faster those things come down, we'll see more of a bigger impact at the beginning of this next year with the shelter costs. But it is a big impact, and it is everything else is starting to kind of fade and go down. So you can see this is the CPI, the Consumer Price Index. It's coming down significantly here. This is a big piece of it. Chairman Powell, he was out in the market this week giving testimony, and he was basically saying that inflation is not all. So what he was referring to was the jobs market. And when you look at the jobs market, that's not getting any better right now. You can see the monthly job gains, they're going down significantly here. So ADP, Bureau of Labor Statistics, they're both reporting that the jobs, the gains are going down, and there's more people going to be on unemployment here soon. The unemployment rate actually went up to 4.1% last week. And so if that goes up to 4.2%, we're definitely going to see some rate cuts. But with all the inflation numbers that came out today or this week, it is very likely that in September we're going to see a rate cut. So milder inflation, September rate cut, that is more likely that it's going to happen. In fact, we have, even with today's producer price index that came out, we have a lot of the Fed governors, they're starting to say we're looking towards a rate cut. So with that in mind, it looks like there's going to be about an 88, almost 90% chance that they're going to go to the 5 to 5.25 or give a quarter point reduction in the Fed funds rate in the September meeting. There's an outside chance that they would do it at the end of this month, but it sounds like September is the month that it's going to happen. So the 88, I've heard as much as a 95% chance. So what's happened to treasuries and the yield on the 10-year treasury, well, the prices have gone up. They keep on going up. That means lower interest rates. When the prices go up, the rates come down. And then the yield, when the yield goes down, the rates go down along with it. So you can see the trend of the prices getting better and the yield coming down. Last about 10 days ago, we were almost at 4.5% on the 10-year yield. We're down to 4.2% now. So been a significant improvement in the market just in the last couple of days here even. So what's the impact on mortgage rates? Well, they're down. You can see from last week, we were reporting just over 7% at 7.08%, and now we're at 6.85%. So definitely the trend is interest rates are moving in a downward fashion here with the treasury prices getting better, the inflation getting better, all that stuff. So just for comparison purposes, 6.85% rates today. A year ago, 7.09. They peaked at 8%. So you can see this is the 30-year chart over here of interest rates. They're starting to come down, and I think that we're going to start to see them come down towards the 6% level here very, very well over the next maybe 6 months to 9 months. We'll start to see them hit maybe the 6%. So existing home sales, we were in 2023, we hit 4.1 million units sold, which was a low watermark for since 2008 is when the last time we hit that number. And we're starting to see that go up. The 2024 estimate is just 4.3 million. And then the year after that, 2025, about 4.9 million units. So my point to you here is that get in now with today's interest rates. They're starting to come back down. You don't want to get into the market when the interest rates are down because there's a lot more people jumping into the market at that point in time, and it's going to get competitive. It's going to drive up the prices of real estate, and you don't want to do that. So you'd rather get the house now, refinance later. In the link in the email, there's more information if you want to get on inflation. And so if you want to geek out and get more information on the inflation and how that works and how that's impacting the market and interest rates, you can do that. There's a link in the email. And then 10 things to know about the mortgage and housing markets. It goes into a lot of different things here. Mortgage delinquencies, foreclosures, still historic lows. Affordability is the challenge to prospective home buyers. So the incomes are not quite keeping up with the housing prices. That's always been the story. It's always a struggle to get into a house, but know that when you actually get into that house, it might be tough for a year, 2 years, but after that, your income starts to go up and it makes it a little bit easy and affordable for that house. So this is Mike Wise with your weekly mortgage update. I will be around all weekend. Give me a call, shoot me any questions, give me a text, whatever you need to. I will be around, and we'll see you next week. I'll talk to you soon.